This is the Southside School of Financial Freedom Watch List and Market Report for the week ending May 8th, 2021. Our question this week is, what is the Dow Jones Industrial Average, or the DJIA? The answer will be provided later in the video. This week, the market ended higher. The Dow Jones Industrial Average increased 0.66% on Friday and was up 2.67% for the week. The S&P 500 increased 0.74% on Friday and was up 1.26% for the week. The Nasdaq, however, increased 0.88% on Friday but was down minus 1.51% for the week. Looking at the week, we can see that there were 11 up finishes versus 4 down finishes for the major indexes. On Monday and Wednesday, the Dow Jones Industrial Average and the S&P 500 finished up, while the Nasdaq finished down. On Tuesday, the Dow Jones Industrial Average finished up, while the S&P 500 and the Nasdaq finished down. On Thursday and Friday, all the indexes finished up. The Dow Jones Industrial Average and the S&P 500 reached all-time highs on Friday. The new unemployment claims were 498,000 versus 527,000 expected. Continual unemployment claims were about 3.7 million. Private payrolls were up in April, but the April non-farm payroll increased by only 266,000, which was much less than the 1 million that was expected. A federal judge overturned the national eviction ban, and U.S. Treasury yields ticked higher on Friday. New unemployment claims, continual unemployment claims, private payroll changes, non-farm payroll increases, rulings on the national eviction ban, and U.S. Treasury yields are all news. And news drives the market. Good and bad day-to-day predictions on whether the market is going to go up or down is virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day, but the market will generally go up over time. Stock prices move in a random fashion. They go up and down with an upward drift. The market will continue to go up because the powers that be want the market to go up. While there are many powers out there, the top 5 powers that be are the Federal Reserve, big financial institutions, big corporations, the President, and Congress. These 5 entities will do what they must to drive the market higher. Notice how the market went up on Friday when it was reported that non-farm payrolls grossly missed estimates. Now we are at our question of the week. What is the Dow Jones Industrial Average? The Dow Jones Industrial Average is a stock market index that measures the performance of 30 big corporations that are listed on stock exchanges in the United States. The financial news reports daily whether the Dow Jones Industrial Average went up or down. Investors and traders get an idea of how well the stock market is doing based on the up or down direction of the Dow Jones Industrial Average. Do you pay attention to the direction of the Dow Jones Industrial Average? Do you own any stocks at all? If not, why not? Are you afraid that the market will fall again? Well, the market will fall again. It does go up and down, but right now, the Dow Jones Industrial Average is hitting new all-time highs. I don't know which way the market is going to go, and I don't care. I trade the market as it is, not as it should be. I take what the market gives me, whether it's going up, down, or even sideways. How do I do that? I apply the Southside strategy. You can learn more about the Southside trading strategy at SouthsideSchoolOfFinancialFreedom.com. Here is my trading watch list for the week ending May 8th, 2021. I trade at least 3 of the stocks on the list every week. The strongest performer on the list this week was Van Eck Vectors Gold Miners. Ticker symbol GDX. It is in the third column. It increased 0.91% for the week, and it was up 1.8% on Friday. Van Eck Vectors Gold Miners is a gold mining company's ETF. It is composed of several gold mining companies. GDX enables investors to invest in several large gold mining companies. Looking at a summary of results, you can see that GDX has increased almost 4% year to date. I own GDX call options. I have generated cash flow from GDX in the past. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from it using the Southside strategy. The Southside strategy involves trading for weekly cash flow, that is, trading for income. SPY is shown at the bottom of the third column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 index ETF SPY? Let me know in the comments section. Are you willing to share your strategy? The Southside portfolio, unfortunately, is not outperforming the S&P 500 index ETF SPY. The Southside portfolio is up only 6.01% versus 12.9% for SPY, a difference of 6.9%. The Southside is losing to SPY by almost 7%. This week, equities, including puts, calls, and ETFs, make up 89.11% of the portfolio. Cash is 10.89%. The cash flow generated for this week was 1.04% of the portfolio value. The account value changed by minus 2.72%, meanwhile the S&P 500 ETF SPY changed by plus 1.16%. I sold option contracts on 4 positions this week, 3 calls and 1 put that range from $209.73 to $514.71. You can get more details, including the total dollar amount of cash flow for the week, on the website southsideschooloffinancialfreedom.com. If you want to learn how to use the U.S. stock market to become financially free, then visit the Southside Schooloffinancialfreedom.com, where you can learn to increase your financial IQ. It is where I document in my commentary blog my efforts to remain financially free. Learn how to use your money to make money. When your money makes enough money to cover your monthly expenses every month, then you will be financially free. People who work for other people for money are wage slaves. People who operate a small business are workhorses. Trading and or investing frees you from being either. If you want a comprehensive understanding about business formations, companies and corporations, the stock market, the difference between investing and trading, learn about legendary stock market investors and traders, stock market theories, and a stock trading strategy that generates cash flow, then read the Southside School of Financial Freedom publication, Swimming in a Financial Ocean of Sharks and Whales: How a Small Fish Feeds Makes Money Off Wall Street by Melvin C. Dunia, available on lulu.com and amazon.com. Please like, share, subscribe. ADOS, ADOS.